Kenya's national bank saying pre-tax profit in the first 9 months of the year rose to 1.43 billion shillings as net interest income edged higher to 2.4 billion shillings. No dividend has been declared though. So let's take it to Nairobi right now and get a view on the markets from Eric Musau. He's a research analyst at Renaissance Capital. Thanks so much, Eric, for joining us this morning. Well, let's take a look at NBK because it was out this morning with numbers. What have you made of those results? Have you had any time to digest them?
Well, I haven't looked at them in detail per se, but you know, they came in well in line with expectation. I mean, National Bank is actually in focus now, especially with privatization coming up. The government and the National Social Security Fund own about 70% of the company, and it's looking to divest away a portion of it to a strategic investor, and you know, the rest through an IPO. So I mean, those results are quite supportive, but you know, the main focus going forward will mainly be to look at who really gets in as the strategic investor for that bank.
Have we looked at any, or have we seen rather, any developments with regards to the privatization of this bank, because it's been market talk for so long now?
Nothing has come out of as yet, but you know, there's talk that leading Nigerian banks probably could be looking at the bank. So you know, we should expect something coming up soon, and I suspect it might be a strategic investor with you know, good financial muscle.
Well, it's certainly entering a very competitive playing field where if we look at Equity Bank, it reported flat pre-tax profit recently, but traders really emphasizing after that results announcement that we're looking at a company that is sitting on an earnings curve that is steepening for Equity Bank. Third quarter results signaling that the bank has moved from defense to offense. What have you made? What are you making of Equity Bank right now? How are you viewing the counter?
I think for the banking sector as a whole, we are looking at a hold in general. For Equity Bank in particular, you know, by the end of the full year, I think the earnings are going to be up probably, you know, the lower maybe 15%, maybe a little lower or thereabout, which is a commendable result. The thing is, where is the growth going to come from, you know, going forward? They have the numbers, but it's been a little challenging for them, really, for them to derive the growth, you know, compared to previous years. They are now a much larger bank, and just going forward, it's going to be challenging for them to really post remarkably strong earnings growth.
The bank has to be confident in its own path moving forward, though. I mean, it's recommended a second interim dividend. How are you viewing the bank's dividend policy at the moment?
I think it's okay. It's very well capitalized. I mean, I really have no major concern with it. It's just that maybe the growth will be difficult to come by. If you look at Uganda, it will take some time before that market gains traction and starts contributing significantly to the bottom line. If you look at their investment banking divisions and the other initiatives that they're coming on, they're very good initiatives, but they'll take time before they start bearing fruit.
In the meantime, the market expecting Barclays numbers out later today as well. What are your expectations on that front?
You know, the market is a little bit bearish on that end. So we're just waiting to see how the numbers come out, but you know, it's probably more negative than positive. We're probably not going to see robust numbers, you know, the type we've seen, say, from Standard Chartered Bank.